All right, welcome back. It is episode 30. What are we at today? 37? 38. Episode 38, HxroLabs Live. We've got LedgerStatus on the stream today. How are you?
I'm doing great. I appreciate you having me.
Yeah, it's a nice last minute surprise. We hit you up on the weekend because you put out a tweet last week that just captured my imagination. I looked at it. You said something along the lines of, I actually got it right here. Let's just, I'm going to preface this whole thing. We'll flip back to these in a sec, but let's just flip over here because this is, I've already followed you on Twitter and love your content. And then I saw you tweet this out on October 7th. You just said, enter all crypto markets. And, I'm always a little skeptical when I see that and I don't see a chart. I'm just like, okay, what the fuck, engagement tweet? It's like, and then later, like, I'm not joking. Alt's going up, all this stuff. And I just I'm curious, I'm watching, I'm looking around, I'm like, okay, let's see, how this ages. And then without fail, the next day, it's just like pop. And I was like, holy shit, I want to know what made you tweet that out. That's the ultimate. And so, thankfully we have some mutual friends and I thought, okay, I'm going to, let's flip back to doubles. And I just thought, okay, I'm going to reach out and we'll get you on the stream and then we'll just shoot the shit and talk charts.
Yeah, I'm happy to be here. And, sometimes you win on a tweet, sometimes you don't.
Yeah, well, and that was not an ambiguous tweet. That was not one of those, like, it could go both ways. It was like, no. Enter all markets. This shit's going up. And, but I love that shit because it's, it's a bold unidirectional call. And, you stream a lot actually already. You got your own channel, right?
Yeah, myself and Josh Olsowich, we do a weekly podcast where we stream the live version on Twitch and then we post it on YouTube and all those places. But, I look at charts all the time. I follow the markets really closely and there's a lot of good reasons to be bullish lately. And we were consolidating really tightly. And when I married up a blend of things between some of the narratives in the market plus the price action on the mid time frames with the going all the way up to like a weekly time frame, things just seem super prime to me. So hence the tweet and we broke up pretty soon after that. And it's been a nice entry but there's a lot of interesting stuff in the market, outside of saying just enter. Managing a trade once you have a bias can be a challenge. So that's where we're in the middle of now is how do you execute?
Yeah. How do you execute? How do you maintain that edge through the move? And then, at some point, where do you take profit is the ultimate, like, when do you get paid? Is the ultimate question, right? I love, a lot of people are saying, well, I'm just going to stay long. And I think for the most part, that's probably going to age pretty well in the next little bit. But someday you got to pay yourself. And I think you brought up a good point. Management is key.
And just going to that, like people trade different products. They trade different timelines, and all of that goes into account when you're considering when am I going to take profit? What do I take profit to? Especially in crypto, it can be complicated.
It is, and I think it adds a layer of complication to a lot of the traders that I speak to as they're starting to learn this craft. That crypto really perplexes people. They say, well, do I take profit in Bitcoin? Do I take profit in ETH? And this comes back to the idea of trading with a plan. And it's something that actually drove me nuts early on in trading because, I'm joining the market. I'm seeing a lot of really good traders. I'm just like, I just want to know what you do. What is your setup? Let me essentially copy trade. That's what a lot of people start off thinking, like, I'm just going to copy trade. You're successful. You know how to do it. So tell me how you do it and I'll do that. And then everyone's response was the same thing. You've got to find your plan. You've got to find your flavor, your approach. And that used to drive me nuts because I'm just like, no. Like, let me start with where you're at, and then I'll make it my own. And only now, like a couple of years later, I realized why that's so important. You really need to have your own plan because it is so personal, right? It's like, what is your time frame? What is your risk profile? Do you have kids? Do you have a mortgage? Those things play into how you're going to trade, what time frames you're going to trade on. And then whether you're trading into Bitcoin and stacking sats because your bottom lines are covered, or whether you need to be trading in a little more conservatively, maybe into USD, do you shift that when the weekly trend is this or that? Like it's unfortunate, it's complicated. And that's probably why, 90% of people lose money. And it's such a treat. If you're consistently profitable, it's a really good thing to be, and it's not easy. So
Yeah, and actually, even beyond that, some people are trying to trade full time and for a salary. And then, for instance, your notion about consistently profitable, that becomes most important if you are trading to consistently take a little bit of cream off the top and trying to trade for a salary. And I have the benefit that I don't have that issue to deal with. I have other streams of income that I rely on, and I don't have to take, X thousands of dollars out of my trading accounts every month to put food on the table. That's a completely different, and in my mind, a much more challenging thing to deal with as a trader psychologically. Like going through down months is really tough if you're a full-time trader.
Absolutely, because you just see your bottom line just dripping away, right? And
yeah, you're supposed to be making money because trading is your job, so you're supposed to make money every single month, and it's really easy to not give yourself any grace to be able to have a loser essentially. And if you're not approaching the market as a full-time trader, if you're approaching it as an investor, then you're constantly looking to outperform the market. This alpha concept of getting alpha out of the market greater than whatever you're comparing yourself to. So most people, maybe you're comparing yourself to a 60-40 portfolio in legacy markets and you want to make more than 7-8%. Well, obviously being in crypto at all is going to give you a significant potential edge and higher risk as well relative to that. And even then within crypto, well, can you expose yourself just to Bitcoin and chill on that and ride the tide or of Bitcoin and how well it does? Or do you want to outperform Bitcoin? So you're seeking that alpha at a high multiple, right? Like beyond fixed income, low interest returns, beyond the stock market, beyond just Bitcoin. You're trying to really, really multiply things and level up when you're actively trading crypto, like we're all attempting. So
and there's always a pump somewhere, right? And this I harp on the leaderboards and the idea, because it's natural to go to something like Binance, wherever you trade, and just look at the leaderboard and be like, oh damn, I missed 120%. It's like, you didn't miss that. I mean, that's happening. There's always a bull somewhere. There's something's going to pump. Even in downtrends, you're going to see a 40% day on something. And I think it's really easy to get caught up feeling like you've missed something or trying to capture too much. And one of the things that happened to me personally in the last few months, and I've become more comfortable just trading 1 or 2 times a week, even 1 or 2 things. And I might wait, like over the weekend, actually, I was laying in bed and, my girlfriend, we're going to bed. It's like midnight. I usually wouldn't trade on my phone, and I'm looking at Theta USDT on Binance. And I've been watching this for a while, because it's been rallying through all this altcoin crap. And there's an event coming up in a week or so that I think might be sell the news. And then I just saw it kind of dump after sweeping the highs, and I was like, okay, I got to set my asks, and I'm sitting there, but that's the 2 trades I've made in the last 2 weeks, maybe, like 4 trades in the last 2 weeks. But that's enough, and that's that 1 or 2 trades, and I see things pumping and dumping all the time, moving around, but it doesn't bother me anymore. And I think that's, like you say, we're trying to capture a lot of alpha here. You got to be very selective and comfortable missing out on each little move of each little thing.
Yeah, so being willing to sit out is a strength. That's like a superpower.
It took some time. But what I noticed is I really like it. Like, for example, I'm watching this thing like a hawk. I think it is. I actually canceled my asks for today's show. I don't want to really sit here because things are looking pretty bullish, and I'm not trying to rush to short. Although if I was, it's one of those that's just up there in its pattern. So if it breaks into highs, easy invalidation. But I've got my sights set on it, and I'm not worried about, I once did, actually earlier this year, and this is when I kind of changed gears, I did a scan of every single coin on like Huobi, KuCoin, Bittrex, and Binance. And when I was done that scan for like location and divergence, and then I was just like, I'm going to make a short list, and it was like a 70 coin list. It took me 4 hours. I was so exhausted. I had no flavor, like no energy left to trade. And it wasn't effective. And now I do a short list on like Binance Futures, is where I'm mostly trading right now. And there's like 40, 50 coins in there. And I just do a quick scan, and I've got like 8. And now I'm focusing on Theta. And so as far as being selective and finding sort of what you think gives you an edge, I find I'm really, really liking the focus now on a few things, and doing actually a little more scalping, which is nice because you can go to bed at night, you're not in the trade.
Yeah, sometimes too, you can get to know a market, like a specific coin or a specific ticker, and you can start to jive with it. Like, how does it move? How does it differ from the way some other stuff moves? And that can definitely be the type of thing that you dig into and you learn to appreciate and can trade. However, I think most of the time you're probably wasting your time trying to differentiate between like a dozen different alts, especially if you're trying to be diversified. The more you diversify, the more you should just be trading some kind of relative index or something. And so I think you either need to choose, how do I focus down? How do I find the potential winners from a technical or fundamental perspective, or trade more broadly and trade either majors, Bitcoin and Ethereum, or if you have access to certain indexes or something like that, then maybe trade those. It all depends on what you have access to, what you can trade, how you approach that market. From a long short perspective, I'm almost entirely approaching markets from a long only perspective, and I'm almost entirely approaching markets from a spot only perspective. A lot of that has to do with who I am, where I live, and what I have access to.
I was thinking that when you said access to, I thought, oh no, because you're in the States, right? So you guys are getting boxed in many ways to a limited selection. And actually, where I'm from in Canada is starting to get that. Actually, we got a message from BitMEX about 4 months ago saying, you guys are out in October, which is fine. I didn't trade a BitMEX, but it stands to reason that where I'm living may end up getting boxed in a little too, which I'm not looking forward to.
Yeah, it's tough. Especially if you're like looking for a certain type of exposure and you can't have it. There's some stuff that I would love to trade, but I can't. I just don't have the appropriate access. And even if you can, worm your way around it, it's either dangerous or, obviously you can't put enough capital there to have an impact. Yeah. So for me, I have access to certain places, and that's some of the power of what we've seen with like Uniswap and some of these DEXs is that there are no barriers based on physical location. There are some challenges there, like you can't have a limit stop on something on Uniswap.
That's a pretty important order to be able to have.
So you're just up all the time. There's challenges no matter what you're doing in a market, but because of the restrictions that I have, and honestly, because of some of my fundamental bullishness, and not trying to get stuck in the weeds, and trying to look at the big picture, being spot only is fine for me for the most part. And being long only is a priority right now, unless I have some real specific reason to hedge. Like I still have some margin access. There are a couple of options for Americans, but it's a big part of the market is what you have access to and how you want to approach the market. I don't want to get lost in, some over leveraged trade or something when I'm looking at, in my mind, we're at the mid stages maybe of a potential year-long plus bull market.
Yeah, no, I hear you. I've been pretty selective with my long exposure through the last month, just because I've been watching, the daily trend within the weekly trend. The weekly's obviously uptrend. The daily trend flipped downtrend actually at the start of September, and I had a good summer, and I really don't want, I've watched sizable gains disappear twice, exactly, right? Once was at the end of 2017. I did pretty well. I was one of the lucky ones who did take a pretty significant chunk of profit, where at the time I thought, oh, this is life-changing. No matter what happens, I'm good. And then I watched 3 times that just disappear, like over, slowly over the year and a half, right? So I thought at the time, oh, I'm set. This is great. Paid my debt. I'm good. And then I watched more disappear, and I thought, okay, risk management, I'm going to imply that. And then the next year I had an ICO that came out and did really well. And I was like, yeah, we're back. And I held that fucking coin, and it dropped, like 90%. So I've learned very acutely twice in my time as a developing trader that I am going to be, a maximalist to USD mostly, but also because ultimately that's what I'm going to use to buy a house. I think someday, I'm all for like someday you can buy everything in Bitcoin. I love that. And I'm going to have some Bitcoin when that day comes. But when I see the trend flip bearish and I see some targets down below, I'm like, let's let this election play out. I think there's a GOX settlement looming that could be ugly. I work with Nick Cote. I don't know if you guys familiar with him. Right. So, and he's got some theories around the macros and some of this deflationary stuff before the inflation comes. So anyways, I don't think... So
you're potentially bearish on Bitcoin macro stuff right now?
Yeah, I've had quite a few narratives that I thought, I've been working with in my analysis, and we'll get into that. We're going to flip to the charts pretty shortly here. But if the guys that are watching the stream right now, they'll be like, oh yeah, like this, we've been cautious, preaching caution, which worked really well because mostly what I did when I went to Tether was sell altcoins. And that was about a month ago. So naturally that has aged really well. And I've maintained, I'd say, about 96% of my portfolio value through that.
Hey, that's awesome. That's like almost no drawdown at all.
That's what I'm saying, right? So, and I was super aggressive. I was like 92% Tether at one point with some other little shit old altcoin bags. And actually, this is the story I should tell. I told you before the stream. So going into Friday, I was sitting still in that majority Tether position, waiting for some confirmations because I was seeing the potential for an uptick. Obviously, we'd already shot up. We're sitting at 11K. And I watched your stream on Friday, in part because I wanted to get you on this stream. And I thought, I should check out their, what are they doing? And so I watched it. And you and Josh had some really nice Ichimoku clouds and some, Tenkan cross, whatever stuff. And that's some analysis that I don't really do. I haven't learned that yet. And it's really nice high time frame trend kind of stuff. And so I watched that and I listened to what you guys were saying. And what really stood out to me was your chart on the Dixie, which is actually close to the same as mine. But what you guys did is you flipped the narrative from being bullish on Bitcoin, ETH, which to me at the time was like, okay, like we could roll over, we could rally. But then you pulled up the Dixie chart and from that frame, it was like, well, we're just bearish on this. This thing's trending down. They're talking about printing. There's a stimulus bill. I mean, and then I just sat there. I think I'm long on that. And I looked at that. I shifted my perspective. I'm not sidelined on crypto. I'm not short on crypto. I'm long on that. And I just thought this is not where I want to be. And after that breakout, I thought, what, I could wait for my confirmations that I have and get those pullbacks, or I could just flip my spot exposure back to the long side because I agreed with everything you guys were saying. I was like, this is actually, especially with some of that more high time frame weekly stuff. I was like, I'm more comfortable being long on that. And I've got a decent amount of Tether, which is my futures account. So that's going to be my Tether regardless, unless I 1x long it. So anyways, long story short, I flipped long on Friday, just on spot. And that was around 11,000 and, 362 ETH. So I have you to thank for that, and I really appreciate it because I do a lot of time creating content. I don't watch a lot of YouTube myself. I'm busy. We're doing this stuff, but I put that on, and it was really valuable stuff. So let's plug your channel. What is your channel for anybody watching who wants to give you guys a sub?
Yeah, if you just look up LedgerStatus on YouTube, and then LedgerStatus on Twitch is where we stream. But all of my videos end up on YouTube from a recordings perspective. And I'm glad it worked out for you. I mean. Yeah. Yeah, we have a disclosure. It's not financial advice, but we're certainly giving our take on the market and how we're trading it. Yeah. And you mentioned the dollar, and that's kind of my primary narrative right now is if the dollar is struggling, and if, Ray Dalio said a while back, and he looked pretty wrong for a while. He said cash is trash for a variety of reasons, and there's so many bullish reasons why fiat in general is got a great chance of being weak for the foreseeable future. The dollar could end up gaining relative to some other currencies, but I think fiat in general, due to some of the macro narratives and landscape, it makes me want to have exposure to real assets, whether those real assets are Bitcoin or gold or otherwise. And I think we will probably have some deflationary spikes, like you mentioned, like some just reasons for, dollar spikes and downward spikes in real assets. Hopefully I can time those, but I want my primary exposure to be in real assets.
Yeah. And that makes sense. And that's why we're here. And, I'm always one click away from back in. Like I don't cash out to my bank or anything, taxable events and all that stuff. But, and just to be clear, you guys never said once, buy Bitcoin, long that shit. That's trashy content. I really don't like that stuff where people are saying, do this, follow me and you'll get rich. You guys didn't do that. You just gave your honest opinion. And I'm looking at it saying, this is, I really like the case. And I was I was also bearish on the Dixie, so that's when I just thought, okay, so like then I rethought it. I was like, so why am I sitting? I can futures like short, long, whatever, but my spot's ready to go back in after that little breakout. And I actually don't watch or follow anyone to find out what I should do with my money. I stopped doing that sort of mid 2019. I realized that I've got my own analysis. I've done my own, learning and figuring this stuff out. And it's really important to me to do my own because when you get caught up following other people's, you'll get it's like a washing machine, right? One guy says short, one guy says long. It's just crazy.
Yeah, if you're trying to blindly follow.
Yeah, so I stopped doing that as a rule. But when I watch some people who I respect in their analysis, and it does, there's definitely some times when I'll go and look at my own and rethink it and be like, and I am a little bit out of position for what even I see now that I look at it that way. So anyways, I really appreciate that because that was a little push that I needed maybe to flip back to bull. And again, just in spot exposure, which because I trade on futures, because I trade on altcoins, being spot long on Bitcoin seems like such low volatility, right? Like
yeah,
even on a massive dump
boring.
day, yeah, like on a massive dump day, it's like, oh no, 10%. I'm coming out of these altcoins that'll just tank 40% in 2 weeks. So it was a pretty, it didn't seem like a major play to flip back into those. But let's get into some charts. I know you've actually got a very similar looking Dixie chart to what I've got. We looked at it pre-stream, and I think that's an important shift for me as well, is starting there. And we talked about it on Friday. We did a stream at 2 just ahead of your guys, and Nick and I had the Dixie on there, and it was kind of the question of like, so who's driving the bus? And Nick's like, of course it's the Dixie. This thing is driving the bus, and when it dumps, a lot of these stocks, gold, things are doing fairly well. Actually, I won't say gold is. I haven't looked at the gold chart, but let's pull up sort of how you approach. So you sit down at your desk. It's time for you to start your day trading. What's the first thing you pull up? Take us through your process.
Sure. Real quick, you mentioned about the volatility of Bitcoin, and you're absolutely right. If you see the right-hand side over here, this is implied volatility on the blue, and the red is realized volatility. And realized volatility on Bitcoin has been pretty low. And yeah, so it can feel safe, and then all of a sudden it doesn't, because you get those impulse moves.
Yeah.
We talked a little bit about the dollar. Here's my view on the Dixie. And essentially, and this is just the way that I kind of feel a market. This chart, from the way I perceive it, is driving just about every market in the world right now. When you see moves happen on this is a basket index, but it's representative of the dollar. You can also chart, of course, the dollar relative to specific currencies like the euro or whatever else. But when the Dixie goes up, then we're seeing sell pressure against the S&P 500, and then it trickles down elsewhere. And that correlation has been so severe recently. I feel like people are just on watch for what's the big directional break going to be for this thing. And I think that's natural after, July, August, September, October. We're in our 4th month of, not really making a new low, and you can call this a consolidation if you want, during that time, and finding out, hey, are we going to really mean revert and go back up, towards what were some pretty severe highs, when we spiked up.
Yeah.
You can't see it anymore. This big old spike back here, that's what happens when in that deflationary market. The stock market went down. Well, people were fleeing to dollars. And then everything in response to that is trying to figure out, well, what's next? A lot of people are trying to predict, like, yeah, we're going to have another deflationary turn. The stock market is out of control. It's not going to work, and blah, blah, blah. In a way, I agree with you, except for the fact that we just keep printing money. Like, there is no fiscal conservative out there. And this chart is running all the other charts. And then this chart is being controlled by like presidential tweets and, government policies and stuff. And all of them, the one thing they agree on is spending more money. And I think despite this really needing to mean revert and move up here, and by the way, this correction, you can look back at the start of it, it aligns straight all the way down to the top of like DeFi stuff, which seems like an insane correlation, like between the dollar and DeFi crap on Uniswap. But that's how much this thing trickles down. And what we're seeing now is a potential failure of that reversal. I was looking at this as kind of a head and shoulders pattern, and I've got this diagonal here for like the actual touch points, but I really prefer these if I'm looking at them on a horizontal. Either way, one of the things we talked about in the podcast was the potential for this to break up, but not realize its full potential for the measured move of a chart pattern, which would have brought it back up to like 96 in this previous, that previous break point. And we only got about halfway up before it started to go back down. And then the question was, okay, is this a retest or a failure? And it went about as deep of a retest as you could before it got any bounce whatsoever. And now it looks like we are on the brink of full failure of this consolidation. And I think in the macro, we could actually move significantly down, because if you go far back enough, you can get all the way down into the high 80s on the dollar. And if you want to have a good reason to be bullish Bitcoin, and if anything else you can get your hands on of real value, it's if this plays out. If we truly break down out of this consolidation, and when you look at it here, like it just looks kind of like this super weak retrace,
it's
right?
Really clear as day. If you look at it zoomed out like that, I mean, we came up and there's just a bearish retest.
Like a purely bearish retest off of this level.
Yeah, and I mean, just tagged it to a T almost off the wick, and then a fail. And after that, kind of a inverse head and shoulders, whatever you want to call it, bullish market structure kind of confirmation, to come up and just crap out like that and now lose that breakout point like you just showed. I think it's clear as day. I mean, that's really weak. It's just, and they're talking about printing trillions more. So
we're arguing like, are we going to print 1.6 trillion or 2 trillion or like something like that? It's like, okay. And
trillions or trillions, what will it be? Like, okay.
There's a lot of interesting stuff out there in legacy. There's a couple contrasting narratives. One is speculative money is at like an all-time high, right? Like the Robinhood traders, the degenerate gamblers, the put and call speculation is super, super high. Places with no fees for trading. So that's one narrative, and people say, oh, well, this has to correct. Well, the other one is that there is more money on the sidelines than there's been basically since, the peak of the Great Recession, the peak of the Great Depression. Like the percentage of money that is just waiting for a dip is so high. What if that money just has to be forced back in? Like that can fuel the market a significant degree, because they don't want to be in this in cash either. If if the dollar continues to fail.
Hell no. I mean, you won't even be, you'll be, I guess, performing at a rate of inflation. Like it's going to be higher than 2%, I would imagine.
Yeah. And it's hard to say like, yes, I believe inflation is finally going to be here after we haven't really had significant inflation since the 70s or whatever. And you're saying, I think we're going to meet some real inflation. I think it is possible, but even without massive inflation, just with kind of losing or hitting the target, like 2 to 3% inflation, that's enough in my mind probably to push this dollar further down, meet these prior lows. And if this happens, the rush to things that are
hard assets
is going to be extreme. And in terms of which ones are going to be like the highest beta, if you will, well, there's, you can look at real estate, or you can look at gold, or you can look at tech stocks, or you can look at Bitcoin. And, Bitcoin is a pretty darn high beta in regard to the potential winners out there. And I think it's very possible that that's what we run into. And I think it could end up looking like this. I think this could end up actually being a little bit of a fractal. This green line is a 200-week moving average, and the white line is a 20-week moving average, for what it's worth. But over here, we dipped below the 200-week, went up, and we failed that reversal breakout, similar to what I think we're doing right now, except for we're even weaker now. And then we had just whatever this was, like 2 or 3 months of extreme downward moves in the dollar. And this is January 2018. That was the top of Bitcoin. You remember, like that was the top of the crypto markets, was when the dollar bottomed, crypto topped. like December and
That's
January,
sick. Nobody was talking
2017 to
about the Dixie
2018.
back then.
And yeah, I mean, I think we've started to realize more about how these markets are correlated over time, and this general consolidation, rise, whatever you want to call it, of the Dixie, like this stuff lines up pretty closely with the way Bitcoin macro stuff moves, and I think Bitcoin's more and more becoming a asset that's a part of the broader market, and I think that we are geared up, failing that head and shoulders, to make new lows on this weekly. I mean, this looks like garbage over here.
Yeah.
Looks like it failed to, just not even got a tap into the 20-week, right into this wick level over here it's just a perfect line on that weekly wick. Missed the measured move that I had mentioned at 96. And I think we can just break down from here and have 2 months of craziness in terms of what that looks like for potential speculation in Bitcoin. And I haven't even showed you a Bitcoin chart yet. This is just pointing at the dollar and saying this thing looks weak.
Yeah, it's pretty, and that's, I think, again, like that's what really shifted my perspective when I watched you guys talk about it, and I said, you know what, we talked on our stream about how, Dixie's driving the bus, and you guys called it. I mean, when it breaks out from that inverse head and shoulders and hits that resistance and then just fails.
Yeah.
And even like tests the level and then just breaks down through it. I thought, holy shit. Let's flip over to my screen real quick. I've got this downtrend on it, downtrend channel, just getting really nice, clean play. Let's get Johnny to flip us over there. I'm on a screen share. Johnny, there we go. So as you can see, I mean, pretty similar charts we've been looking at. I think most TA analysts would look at this and see the same thing as far as structure and trend lines go. But it was this downtrend channel that I just thought, when it was breaking up here, I thought, okay, here's our, it's decision time. But once I saw this for what it was and really wrapped my head around how that's going to drive Bitcoin, I thought, okay, at the time I was thinking we're in this triangle. We had come down, it was kind of at the end of a bearish drop. If you can see here, the sell volume was in charge. What I would say is the bears are in charge here. Volume analysis would suggest, right? And this buying hadn't started yet. So when I look at all this, if it's a coin flip, I'm still leaning bearish based purely on this. But then I flip back here and I'm like, oh, okay. So if we're inverse to this and this looks like trash. So this really was an outstanding leading indicator in that sense. As, again, just starting to sort of really wrap my head around. I'm not a Forex guy, not a stock guy. And I'm really happy to have this tool sort of added to my belt because
yeah,
I mean, as you said, it's, and that's actually pretty sick. I hadn't really looked back at it. If this was our top in crypto, was it really the CME futures that killed the bull?
I mean, it was probably both. Like a lot contributes there. But it is incredible how it lines up. And even what you showed there with the channel, like I hadn't even looked at that downward channel, but I think good TA strategies, whether you're looking at moving averages, which is kind of my preference. My co-host Josh is just ridiculously disciplined and good at working with the cloud, Ichimoku cloud. Yeah. Whether you're looking at pure horizontal levels, the best levels all kind of line up between those strategies, and that's what we tend to run into. And one of the things you said in regard to the structure having some bearish potential, in my mind, I completely agree with you. The daily and the weekly were in conflict, and the question for me was, what's going to win?
Yeah. A daily downtrend and a weekly uptrend.
Yeah. Daily downtrend, what could have been like some kind of bearish consolidation, some kind of bearish distribution pattern before a further breakdown, not making a higher high or anything like that. Yeah. And I think what happened there was the broader macro alongside the weekly levels that I can point to, they essentially just won out relative to that daily consolidation and the lower time frame consolidation. And, these levels are meant to be tested. We are sitting at another one today. And if you end the week right now, then the current weekly looks fantastic. We could have a couple of 3-4% down days and the weekly looks like it got rejected off the high again. And here comes our bearish momentum once again.
Yep.
So
one level at a time is never been truer. And that's
absolutely.
And that's what's tricky for me. And, because what I look at and you'll see these bands all over my charts, these what I call the reload zone, or RLZ. I learned from a guy on Twitter, Brian Beamish over at TRI. And he talks about this reload zone on Fibs at the 702. And actually the Dixie, I just noticed, I was like, boom, 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 because it's sitting in one. And that's typically where, you look for reversals. You look for, in this case, for it to start flipping bull. But I just drew it up here because I thought that's interesting. If we come down to this breakout level, this is a huge range. I mean, that's a massive, that's a pretty massive. A lot
can happen in that.
Yeah. So it could land here and tag and be like, oh, look at that. It stopped in the RLZ. Or it's like, oh, look at that. It stopped in. So, I mean, this is not as relevant to this, but on Bitcoin, my analysis as far as trading goes, it does get tricky because when you move up into here, this is where, okay, we're getting into that short reload zone. So if you were bearish through all of this, and I will speak to Brian in general, because when we were down here, he's like, yeah, like this, could be bearish, could be rolling over. And if we get up into this short reload zone, I'll see if I get any setups. It's not about predicting where the market's going. It's not about, trying to call anything. It's like, well, if my short setup comes in, I'll take it. If my long setup comes in, I'll take it. And sure enough, here we are up into here. Everyone's getting ready for that big bullish, breakout we're talking about. And that's right when, he and this TRI method starts thinking, okay, so we're going to start taking some shorts up against these highs, mostly just because it is good. Like, it's close to invalidation levels, right? If you're shorting down here, I had a little short down here on a lower time frame and it got blown out and it's like, cool, I'm flipping long. But so I'm a little torn right now because my analysis shows me that on this 4 hour, we've just made a new high. There's no momentum. Like, all these indicators are rolling over. There's bearish divergence. We're up in the short RLZ. But like I said, because I'm just spot long from like around here, I don't have to worry too much about this. I actually have my, I can put my spot on a stop loss right below this pivot low and just, I don't care. Like, I'm not worried about that at all. But when it comes to my futures account, once I get up into this zone, obviously I'm not hunting longs. I'm hunting.
I don't think you need to be hunting longs now. I think hunting, how do you want to set your take profit? How do you want to set your stop? What are you looking at for the next breakout is important because we're sitting right at a weekly level. Another, tweet that I'd put out before was when we were in that consolidation zone before we broke up from it. I had said my gut says long now and put my stop below 10.6. And I said, this is if you're approaching the market with this more short-term strategy and take profit around 111. So what we've done now is we've busted through that primary resistance, but the first real points of resistance were, over here under this area that acted as support before we finally failed it. So your trade would have been if you're entering pre-breakout, entering somewhere in that consolidation, taking profit at 11.1 or so. What we've done is we've overextended that, and now we blasted straight through these primary levels, and we're into like the real meat of that prior consolidation and 11.5, and that is now like right where the 2019 weekly highs were. So now it's a question of, okay, are we gonna really go for it? Because what everybody and their mother will tell you is like above these weekly closes, and that's why this one was so dirty. Like
that was a nasty fake.
Yeah, I mean, it was whatever you want to call that, a swing failure pattern or whatever else. Like the fact that we broke up, closed, but it wasn't like this big impulse, and then when we broke back down, that was it gave a perfect setup for this kind of impulse down.
Yeah, having like a big fail followed up.
But now look what we've done. We've recovered it. We've had this long consolidation. So now we're looking for, can we re-tackle it? And if we re-tackle it, it'll probably be with a thrust and get a proper weekly close up here, 12K or higher even. And what's fascinating about that is you start running out of levels, like whether you're
well, that's putting the vacuum up there, right? When you
it's a huge 12. It's a huge vacuum. Like you look at some of these weekly levels, like if you just kind of create some choose a weekly open or a weekly close.
I think that's the one for me. Yeah, just below where you were there, where that
right here.
Yeah. See, that's where the bear market really that's where the bull market confirmed over.
But that's right where we wicked to back here. So
exactly. Yeah.
Are we going to touch 14K? My bet is yes. If we thrust up again, if we deny this swing failure here, and we recapture this, we got nothing but a wick up to 14K, and I think we fill it. Like, I think that's where my bias leads. And also this 20-week moving average, this white one, it was a little
I keep
messy.
hearing about that. Yeah,
Yeah,
I get it.
it was a
I
little
don't use
messy
that one. I gotta
here.
put that on.
Well,
So it seems like
here's
if
a good-
everyone's looking at it, I'm curious, you know.
and that's what all TA is, right? Like, pay attention to what other people are looking at.
Yeah.
And it's the 20, the 20 SMA is also the Bollinger Band midline. If people are Bollinger Band watchers or traders. But look how we rode it throughout the throughout the bull market. This is from the end of 2015 onward. We did not get not a single weekly close. And usually the most we got was like some kind of weekly tap, or this was like a Bitfinex hack or something and we still recovered it. We didn't break below it. We didn't go below it until we turned into the bear market. And then when we turned into the bear market, look at that. It was a perfect ceiling. And then we capitulated off of it. And then look, when the bear market ended, we flipped it.
Yeah.
Now I got a little messy.
That even front ran the breakout at 4,200. That's dope.
Yeah, this is,
Love that.
I was so bullish right here. And it was very counter narrative to what everyone told you at the time.
Yeah, I remember. And there was even a big tether FUD. That was the attorney general that week.
Oh yeah, there was.
Yeah, right after the breakout, it was like tether indicted. It was like,
naturally.
Yeah.
But when we flipped that 20 week, we had double tapped the 200 week, which has been the bottom of every Bitcoin bear market. By the way, this is only Coinbase. If I showed you the BLX, it would show the prior bull market also stopped at the 200 week. And it got a little messy here, but I think it's because we're consolidating for our next true and proper move up. And I think that we're, like, a lot of people aren't going to pay attention to this market until we make a new all-time high. So
yeah, the real rush, and maybe not, it's, it may not be the same retail rush, because $20,000 is a lot of money. People look at that, they say, well, I missed it. But we're talking about corporations now, right? We've got Square moving money out of their treasury into it. So I think there's another layer of FOMO that is going to, be well beyond the mom and pop retail drive of 2017.
Yeah. I'm with you on that. Like the drive to real money, but look at what we're seeing, whether it's MicroStrategy or Square or other people, they're talking about putting Bitcoin in their corporate treasuries. Like that's not even what you would have expected in 2017.
That's a new and
exciting
narrative. Yeah. I mean, that's the shit, right? That's what we've been waiting for. And I've been, we've been talking about this. I don't know, like, I'm sure you've brought it up with your crypto buddies at some point. Is like, man, there's going to be a point where there's a floodgate, and that floodgate's going to open, and it's not going to be a case of, is this happening or whatever. It's going to be like, holy shit, this is a real hard asset. This is the new gold. And then people start to really extrapolate what that means. And you get guys like Thomas Lee at Fundstrat talking about some of his macro size stuff. He's like, if 1% of the wealth in the world, of the value in the world, moves into Bitcoin, then a single Bitcoin will be worth a ridiculous amount of money. Like over
I guess you need those permeables to continue the hype train and the narrative and whatever else. What really you're going to run into though is like, oh yeah, I remember when I laughed at Bitcoin because I knew it would fail after all my friends bought it and it was $20,000 and it went down to 3,000 and I'm right. And then all of a sudden it's like, bam, it's back at 20,000. Wait, what?
I missed
people,
it.
They missed it. And then that's what kind of gives you that cause for FOMO. I'm not sitting here trying to make some grand price target and say we're going $100,000. I'm trying to look at what can I play this from a level to level perspective. To wrap up that thought before about that potential for daily breakdown, I've got this tiny little diagonal, if you can see it. And if you were looking on those lower time frames, it was that potential bearishness. But when I got up to this weekly, it was just like boom, 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 4 or 5 weeks in a row supporting that 20 week. And
that's clean. Yeah. That's just,
it was pretty clean. And it was also right here at this prior weekly high that we had, consistent buying from. And on the daily, I was looking at it like, man, this looks like we are due to go down and test 9,200, 9,400 back where we broke out from before. And this is when the real big DeFi hype started too, right? We had these 3 or 4 weeks of Bitcoin going up, DeFi going up, everything going up, everybody partying and having fun.
It was great.
We did not fill that gap. And it's just, we saw enough pressure that it gave me enough cause on the high time frames to be bias the longer we didn't break down from it. I was ready, I was ready to live through this gap and like find the next trade.
Yeah. That's what I was eyeing. That's
off
your
of wherever it
CME
went.
and ETH BTC and Ethereum down to 250. Like there's a lot of stilt gaps down there, as I like to call them. It's not a price gap as much as just like the single green candle that just looks weak as fuck.
Right. But we didn't do it. And so now I'm trying to see, okay, is this going to be a really painful, long consolidation like that goes out to, the first quarter of next year? It's possible. That's certainly possible. I don't lean that way though. I actually think we're going to impulse.
Just break out violently.
That's where I
love that.
That's what my gut says, but
that's what I want. And that's, there's going to be, it's just going to be so beautiful. It's what we've been waiting for. If you've been living through this bear market, trading, protecting capital, whatever you've been doing, it's just not as exciting until you get like a nice rip roaring impulse. And we've seen a few this summer. I think the bears, and this is sort of what I sort of came to my senses, I guess you could say, through the end of last week, where I was looking at my charts, what you guys were talking about, and I just said, look, the bears had a chance. We'll flip back to my chart real quick. And the bears had a chance through this to really show up. And yes, the sell volume did exceed the buy volume, which is why I had the bias I did. They had a chance here to really kick it up a notch. There's just apparently not enough bears around to push the price down. They didn't show up. Right? They had their chance. We lost range lows. We reclaim range lows. We lost them again. We reclaim them. And then sure enough, you only get so many chances to do that. And then it's like, okay, we're not going down. Let's take it up. So we are up in that high 11s. Likely, it doesn't seem like, there's going to be some stop here for any particular reason. We got the pump chaser zone on, which is just a 382.5 that I like to use as the idea of, you shouldn't chase a pump. That's not really how you trade. But in a rip-roaring bull market, you're not going to catch these big, juicy reload zones that I like to trade out of. So I put this pump chaser on because a lot of times on an impulse or any kind of move, you get that 382 tag. And lo and behold, that's what
we hit overnight.
That's what the dump was this morning. It was a perfect bullish throwback to back here at the September 20 highs or September 19th highs. And if you look at it, really, it was just a cute little tag of that 382 actually to within about $2. So that's the idea of like, I draw these on here. Well, actually, no, should take that back. So it would have been drawn from here. And so depending on what chart you look at, this is the Binance futures, but it basically just tagged. And in fact, did it front run? Yeah. So it front ran, which is something historically that I see as a very bullish sign. So when you don't even get the 382 tag, typically that's preceded by a pretty strong move. And the one example I always go back to for that, sneak peek there. The one example I always go back to on that is VET. I don't know if you've been trading VET, but this is an example of a 382 front run, which I always remember from this summer. And it's subtle, but if you can spot these, look at my pump chaser on. So you see here how it rallied and then just dumped as it usually does, but it didn't hit the 382. It just kind of front ran it, and then it reclaimed. So often after you get a front run, so checking that level is pretty standard. So when it doesn't even get to check it, and then as you can see, obviously with VET, it aged pretty well. So it's a nice little subtle signal, and we just did that on Bitcoin actually this morning. I didn't even notice that because I had it drawn incorrectly up to the high from today. So drawn the way it should have been up to this high. It did front run that. So that's pretty exciting. And I think it makes all kinds of sense from a number of time frames to get up to range highs here. And that's where we'll get our sort of next battle zone.
Yeah. Jim Reardon brought up something in the chat, which I think is worth mentioning too, is that the volume confirmation is not there yet. So really to find out, hey, are we just going to continue in this longer range consolidation, or are we going to break up properly? We'll need to see some kind of volume candle come in. And what's best is, and this happened in July, like you get a real volume signal to say, hey, this new level that we've moved to is real. And
right
it's
here.
July 27th. Yeah. That was, to me, like that was saying, hey, we're going to spend some time up here because we just came in with some serious volume on that breakout. We don't have that yet here. So even though we've moved up, as you can see on your chart or wherever, like if we that gives us room for proper volume, and proper volume would be, leveling up the next bunch, 12K, 12.5, something like that. And if we don't get it, then maybe some of those bearish divergences and stuff that you mentioned could play out. We get some mid time frame consolidation, and maybe our new normal for a little while become establishes itself between this 11 and 11.5 or whatever kind of mid time frame consolidation you seek next before you do finally get the breakout. But and they can't see it quite on my chart, but I've got those diagonals down here on the volume. We just don't have that volume breakout here. When we get that confirms the weekly chart that I had pointed to earlier. Like get that big breakout and start creating some volume in those areas that previously were just wicks, like these areas up here that were wicks, because those were the blow off top of a huge run off the bottom. Well, they were just high volume wicks, and now we need to fill that air gap. And
we're coming in with some strength, right? When you consolidate like we have, it's a lot different than like the exhaustion end of a sort of reverberation of the 2017 bull, which is what we saw in 2019 there.
That's right. And I think that's what we could end up doing is leveling up and then spending a little time, establishing the volume in this prior range.
Yeah, no, that's a beautiful looking chart. And that's one thing I find refreshing. I think once in a while I get my templates, I get my charts that I'm watching, and more lately I've kind of forced myself to reset, start with a naked chart, start at the weekly, and just, kind of draw it up with a fresh view maybe once a month, just to make sure that I'm not pigeonholing myself in a single consolidation or a range that I've been looking at for too long and missing maybe a bigger picture. And that's also actually part of why I like to, I follow who I follow and I watch their stuff. You just get that fresh look. And I can't agree more with you on the volume, because you're right. And I'm still not seeing it on the lower time frames. We're seeing it. I think there's some fairly significant upticks in the 4-hour buy volume. Obviously the bears have backed off, the bulls have arrived, but if you zoom out and you get to that daily, there's nothing significant yet. And so I am forced to, take it, like we said, one level at a time. I think range high sweep seems probable at this point before range lows, after reclaiming the EQ here. And, once we get up there, I think it's going to be pretty cut and dry. I mean, either we're going to not have the volume and there's going to be bearish divergence and we're going to show some signs of failure and some big sells will come in, and I'll be like, oh, cool. All right. We're going to, we'll just take it that direction.
Or you have another chance to reload off of wherever it consolidates to.
Exactly. Or, or the volume's going to come in and the momentum's going to increase, and probably, and in that case, we're breaking out the highs.
I think you bring up a good point on those low time frame volume areas, because the last few times we've had impulse candles down, the volume on the impulse candle down has been outdone by the recovery volume on the way back up whenever it broke back up. And you could see that as recently as last night. You've got it on your chart right there. Yeah. Or I think you do. Maybe you need to go down another, like to the hourly or something.
Okay.
But what did you call that? The pump chaser zone?
Pump chaser zone, yeah.
Yeah, so that candle down, that volume was dwarfed by the recovery volume.
And really nice signal.
Yeah, so that to me shows that we really have strength moving into the next level here. The fact that this candle, it failed, even though there was some kind of low time frame pattern here, it failed to really produce, the bearish move down, even to like a 1 hour moving average. And then it was followed up by significant spot volume. I'm on Coinbase here over the hours after that, where people continued to buy it up. So that's just showing a willingness to buy Bitcoin at that price, which is great.
It's really good. And it tells me that there is protection of these levels, right? When you see the buy volume come in, and that's what I talk about this a lot, the idea of, let's not just get long, get short. Let's get short where the smart money is getting short. Let's wait for them to put a top in the market. And then I want them to protect my position because it's their position. And right now with that volume, it's sort of a stamp of approval of these levels. It's saying, what, the buyers are here, they're moving in. There's not some sudden new rush of retailers that just showed up. No, these are some big players that are putting in these moves in the market. And that's why you see that huge volume coming in. And so again, going back to the importance of volume, it really does put a stamp of approval on what you see in the price, which is something we talk about regularly, waiting for the volume. And that's, that's again why I wouldn't say I broke my rule on Friday, just buying at 11. But I was a little more aggressive than I might otherwise. And it was simply because I saw that volume come in and I had sort of seen that weekly perspective that you guys provided. And I thought, you know what, again, going into spot for me, like it's a 1x long, and given how much I trade on futures, it just seems, if anything, kind of boring. So I didn't, not too much risk in there for me. I mean, even if it goes back down to 10.5 and I got to cut it, it's a relatively small loss, given what I'm used to. So the volume is what stamped it for me, though. And
you
actually,
say that about a 1x long. Josh brought up something in our last podcast that I thought was fascinating. And he talked about how so much of Bitcoin's yearly move happens in just a handful of days. And the risk, he's got this chart up of mine, but the risk of being in cash is if you miss one of the big impulses up, then you could have just ended up on the sidelines on like the most important day where to take advantage of what was going to happen from a bullish perspective, So if you feel overall confident on the high time frames, then I'd rather be sitting in Bitcoin when I'm not in like a more specific trade than sitting in cash if my overall narrative is bullish.
If the weekly, and that's actually, again, re-examining my positioning at the time, I was perhaps trying too much to capture what I saw coming, at least on a probability level. I was kind of leaning like 60-70% bear for Q4, based on just what we saw at the range lows and the higher sell volume. And I thought, okay. But what he said, he's like, look, I'm not ready to take my margin longs yet, but I'm very comfortable in spot.
Yeah.
And then I kind of went back and looked at everything, and I kind of looked at the books, and I thought, you know what? Given this breakout today up to 11K, like I'm more comfortable in spot. I'm gonna flip back. So it was just that kind of re-questioning my own sort of, and that's something that I've learned and is challenging. And you'll hear a lot of traders talk about this, like flipping your bias, admitting when you are wrong or on the wrong side of a higher time frame thing. Historically, maybe even a year ago, I would have been a little more like, no, like I missed that little breakout. I'm going to wait for my pullback. Last week, I was just like, no, you know what? Like I was leaning short. I got my tether in my position, and nope, I'm wrong. I'm going to flip back, and I'm going to, like I say, if you're going to FOMO early. So it was a pretty easy flip once I looked at it that way. And, like I said, my futures account sits in tether, so I'm kind of unavoidably going to have some tether in there. And when the long setups come in, I'll find them.
I actually missed the long entry I was trying to get because it took over an hour for my Bitcoin confirmations to come in, to be able to take the position that I was seeking.
Oh no.
And in that hour, Bitcoin not only broke out, which I was looking for, it moved like $300 and it removed the cushion that I wanted. Like I knew I was buying in the consolidation and not like a confirmed breakout. But it would have been a really nice $300 cushion for whatever kind of retest could have occurred.
Instantly, yeah, you get that cushion right on.
Yeah, you just get that cushion to feel a little more comfortable in your long. So what I had to do instead was I had to add over time. Like I started, and I am in a leveraged position right now. I don't do this that frequently, like I said, but I was getting in nice and slowly because it was like, I didn't get the comfort level here. Like if I could have gotten in here and anticipated it, well, I could have done a pretty tight stop, taken the L.
That's the thing, but you can take some size there, right? That's why.
That's right. You can take some size there and then feel more comfortable in size. Whereas if you're taking the long at the breakout level, at the initial breakout level, well, then you're like,
you got to risk all the way down to those lows.
Yeah, that's right. You got to risk your risk reward ratios change a lot. So what I did was actually I've been entering the position like a quarter at a time. So I entered a quarter, I entered another quarter at this next resistance level, and I entered another quarter actually right around here somewhere. Mm-hmm. So I've essentially entered another piece of the position in each of the lower time frame consolidations because I missed my opportunity in transit.
That's brutal. So you sit off exchange, I guess, for the most part when you're between trades?
Yeah, I try to keep spread out between exchanges and then keep coins off of exchange as well.
Yeah, and that's like, again, going back to risk management and having your trading plan, you've really got to decide what your comfort level is. I think at some point I just decided gloves are off with me and Binance. Like I'm comfortable there. Like those guys just, like they fucking puked out 40 million to cover a hot wallet hack. They didn't even blink. Could they get shut down? Could there just be like this domain is seized? Like that would be terrifying. I just don't see it. I think they're kind of decentralized as an entity, and they probably could have like 2 of their offices shut down and still have their servers running. I don't know. That's maybe a little hopeful, but I've got to accept the risk because I don't want to do that. I don't want to have to transfer money to the exchange when I want to make trade for that exact reason. In this case, it, unfortunately it bit you a little there, but I get it. I get it. Hold your keys, because especially like you sound like you trade a lot more in the higher time frames. So if you're sitting in a spot long position, you don't need to sit it on the exchange.
Yeah, and honestly, it just depends. I mean, there's times where I keep plenty of money on exchange, but most of my active trading was actually occurring in that DeFi landscape. So,
there's you're sitting on my Ether wallet. I think.
Yeah, so I could be, after we topped out and we're doing a lot of this stuff, like I wasn't feeling a rush to be in a trade after this candle here. Like a margin. Yeah, so I wasn't in a rush for a margin trade on Bitcoin. I wanted to see what was going to happen here. How is it going to resolve? So my conviction didn't really come until here. So I had time to be in a wallet. Like I don't mind being in an exchange for a while. But
especially if you're in a position like you're margin long, you're like, I'm comfortable now.
Right. It just kind of depends. So yeah, for whatever reason, I had Bitcoin and Ethereum both a lot, mostly in wallets in that scenario. So it just happened to work that way that time. Yeah,
absolutely. I mean, I was going to ask you a question, but I don't think I should do that on the air just in case. But I was going to say, where do you trade? But I don't know if you want to talk about which exchange you use as the US.
I trade at all the places where I'm legally allowed to.
Okay. Well, that's good. Do you want to share then? Because I know we got a lot of American viewers who would like to be, getting some more access to these products, and they're often asking us, and I don't know because I'm Canadian. So.
Yeah. If you want to take margin positions as an American, really the only ways to do that are through like a decentralized exchange, which has got a lot of bumps in the road right now. I've tried it, like through BZRX and DYDX are the 2 options that are out there right now. Both of them aren't really there yet. And then if you want to trade options, there's like OPYN, I don't know how to pronounce it, and then the Octus, like AUCTUS. So those are kind of your 4 decentralized options that none of which are great. If you want to trade options as an American, then you could use LedgerX or you could use CME, both of which have various limitations and then contract size requirements. Like a 1 contract option on CME is like 5 Bitcoin, something like that. So you're spending, you're spending some money if you're taking an option position as an American on CME. Not to mention they're closed on the weekends, and we know what. Sometimes Bitcoin can punish you on the weekend. So
yeah, talk about a gap. You don't want to be the gap.
Yeah. So really the only, what I would call kind of crypto native centralized exchange that I know of for trading margin as an American is on Kraken. From a security perspective, Kraken, I think, has a perfect record.
I believe so.
Yeah. From a user experience perspective, I think Kraken they have a lot of room for improvement. But yeah, you can trade with margin on Kraken, and their volume and stuff has improved. There's some things that you have as a disadvantage as an American in that scenario. You're trading on margin. You are paying whether you're long or short. It's not like a perpetual swap where, depending on the state of the market and some kind of index, like you're getting paid to be long or paid to be short.
You're just paying a fee.
You're just paying. Borrow. That's correct. You're paying a fee to borrow 5 times your collateral, because you can take up to a 5x position, and you have a percentage margin. So it'll say like, you have 350% on your margin account or something like that. So yeah, it's it's not a great landscape. Like this is where some real, some real innovation would be great for Americans, or figure out a way for Americans to be able to participate on some of these other exchanges. I'd love to see it. The only other one I know of, I think on FTX, you can also be in margin positions on FTX US. But
interesting. I hadn't heard that.
I think you have to have $100,000 on exchange in order to participate.
Yeah.
So they're
Again,
purposefully
pricing
kind of
out.
limiting that to the big money.
Yeah.
And I don't even know what the liquidity is like there at all. So I
I
think,
haven't pulled that up myself, but
yes, I think mostly you can take margin positions on spot, on Kraken, on maybe a dozen pairs now, something like that. Most of the major altcoins and of course Bitcoin on Kraken. So yeah, it's not a great landscape for the long short portfolio.
No kidding. But you know what? It's good to know that you have Kraken, because that's not one that I've ever, I've had a few guys here asking. Actually, let's flip back to screens real quick. I feel like we're just chatting, might as well go to FaceTime. So, I mean, it's good to know you have something, because unless you're getting real fancy and real spicy on the scalps, 5x is a good amount. And I don't think,
I mean, I don't really understand why you would need to go beyond that. And
I mean, if anything, it's just
5.
convenience. I'll go 10x because that just means I can have a larger position. I don't have to tie up as much of my capital. I'm not taking any more risk. My risk stays 1%, really, no matter what trade I'm in. I'd say I'm maxing out around 1 and 2% even is still pretty high for me right now. But I might even be on 25x. My risk profile is the same. I'm just putting up, $800 a margin instead of 4,000 or whatever.
Yeah.
It just gives you a little more flexibility as a tool. But I think a lot of people see it differently. They think more leverage means more risk and more potential. But it's just really a tool. So at 5x,
even when even when those exchanges used to hype their 100x positioning, it doesn't necessarily mean you take the trade with 100x. Like it means that, say you get a trade in position and you're like on a long-term futures position, for example, and it's a contract 6 months out. Well, 3 months in, you could be like $2,000 in the money, and you can remove the vast majority of your collateral to where you're 100x or whatever margin, but you're in a huge profit. You just don't need to keep the collateral on the exchange anymore. That's how those are designed. Yeah. People just, degenerates took it as like, okay, now I'm going to take $1 million position with, I don't even know how that divided by 100, and that's how much collateral I have.
Let's go. Yeah.
Yeah. It's like, here's 10K, but I just bought $1 million worth of Bitcoin. Like that's a different level of degenerate.
Yeah, I'm always amazed. I used to watch on the if you're on BitMEX, you could see the liquidations coming in, right? And there'd be like a $2 move in Bitcoin, and like 50 liquidations would come. I'd be like, who's trading that? Like whose liquidation point was that $1 or $2 above price? These 100x guys. But you make a good point. If you're into a swing position and it goes way in your favor, you just slide that leverage up, take the margin back. You've still got the position. And
then set some kind of stop and profit at that point.
Trail it.
One other thing to note, if people are looking to trade Kraken as an American, they auto close you after 28 days. So you need to consider you're taking 28-day positions at a maximum on Kraken. So you're really limited to 5x margins, swing trades, paying both ways. And I think somebody mentioned the other day the APR you end up paying is in the 20s. It's like 25 or 30% interest if you kept a position open. Like if you were constantly in margin trades for the course of the year, like you better be making more than 25 or 30% because that's kind of the relative price you end up paying, whether you're long or short. So it's not the type of place where you can go say like, oh, I'm going to go short Zeke BTC and leave it open for like 18 months. Like you can't really do that there.
That's always the dream narrative, right? It's like you look back at that chart, you're like, oh, I wish I just shorted there and I'd be comfy for a year, until you see it chipping away. And that's, and if you're not moving down, right, in a year-long trend, you're going to get 4 or 5 week up moves moving against you with the funding kicking your ass. It's not ideal. I think I'd be curious to know why they don't make it more attractive. It sounds like they are the one option for US users to hit margin in crypto with KYC and legit. Why?
And honestly, I do not even know how they do it. And they don't even operate in all states. So, dude, the regulatory landscape for trading anything for Americans sucks. Like it sucks. So the beauty of things that can't be stopped, like Uniswap, is kind of incredible. Like, and that's part of what drew me to DeFi stuff. Is when I saw how all that stuff is structured, I thought it was fascinating, and I learned a lot. And it was a great opportunity to trade. and it was completely open to everyone in the world to participate in. So that was a gift for Americans. Like,
yeah,
great.
well, no kidding. It's a paradigm shift, and it's going to evolve. I mean, I imagine there will be more speed, greater liquidity. Believe it or not, it's already actually hitting new all-time highs today. We'll take a look, and options, right? So that you can have stop limits, you can have stop markets, whatever it is. I mean, it seems, I'm not a technical guy, but it seems like just a matter of coding and setting it up and developing it. I don't see why we couldn't have all that stuff. Maybe there's some roadblock there that they've, knocking their heads against the wall trying to figure out. But
yeah, I saw a tweet that said Hayden, whatever his name is, said that V3 of Uniswap fixes, quote, everything.
Yeah. So actually, let's pull up Uni, because that's on my list today of things, we just want to touch on him. And maybe what are we getting at to just over an hour and a quarter. And I know you got something coming up. I got a call as well.
Okay.
So let's see, maybe for what do you got? 15 minutes? We
sure.
Call it. Yeah. Okay. Perfect. So I'm having such a good time with you, man. I hope you come back someday. We're going to get you back on here and we'll just shoot the shit. Let's see if we can get some charts up here, get some requests, so that a few of these guys, I'm seeing a lot about hate.
Yeah, people keep saying that. I don't know what it means.
I don't know what that's all about, but let's take a look at Uniswap perp. Do you chart that? Do you have a chart on that, or I can pull one up?
Yeah, I do. My window is thinking. I don't know why.
Oh, okay.
Buffer. It's trying to switch to a screen share, and it's not liking me very much. So if you lose me, you know why.
Right.
So I might let you pull up that chart, and I'll talk.
Yeah, for sure.
I tried buying the knife on Uni, starting. Well, I got stopped out a couple times for like a scratch, but I was looking at the writing on the wall with a lot of these coins. Like, they topped out and then they just needed to chill for a while. But when they broke the lows, and for Uni, that was like below $4, I was just looking for when's the capitulation, and it looked closer and closer and closer. I tried to get in around 290, which now it looks like it was a great entry, except for I stopped out for a 10% loss because it reached my risk parameters that I wasn't willing to go beyond. Fortunately, I got back in some other stuff. So that was a day before my enter all markets tweet.
Oh no!
because that was when it finally did bottom. Like, I was so close to it, I just wasn't willing to stick in there for that 15-20% drawdown that was possible.
Yeah.
And I wasn't being patient enough to try to go in with a tiny size on it and average it up. But that's what I was able to go in with more confidence once it really looked like it had bottomed. I'm just not looking to go for bank on these, because I think most of them are just kind of delivering some.
Oh, let's switch the screen share. I'm sitting over here. Oops.
Yeah, see if you can do it. Mine is
I had it up here.
I have infinite wheel going on.
It wasn't on screen. My bad. Here we go. So it looks like you got in somewhat, I guess, on this break up here would have been around 290, and then this was your stop out. That's based on what you said. That's sort of what I drew from it. Can't hear you. Did we lose him? Oh no! I think we lost him. Okay, it looks like Ledger may have been disconnected. So we're going to see if he can slide back in. It did have the writing on the wall there. Yeah. So we're going to get this Uni chart. I had this on my screen and I looked over and I hadn't flicked the screen share. There he is.
I'm back.
Yeah, might have to plug in. Ron, let me know if you have to plug him back in. Do a few of the shots. Do we have his sound up?
Yeah, can you hear me?
I can hear you clear as day on Rendezvous. I just want to make sure it's pushing live.
Yeah, I think we're good.
Okay.
It just freaked out on me.
Yeah, it does that once in a while. So, I mean, it looks like we may have had you're getting this breakout. You said 290 on Uni, and it was this nasty little pullback.
Yeah, it's that last little capitulation.
Now, can I show you something? This is just, if I can show you anything today, it's this one thing. This is one of the things that I'm obsessed with fibs, and I'll show you this. So this is how I try to find bottom. So again, I didn't trade this. So I'm not gonna say I would have done it this way, but one of the things you'll love about this RLZ, if you ever try it, is so here you got your low, you got your higher low, you got your breakout, right? So this would be that beautiful. Well, get the magnet out of here. All right, here's your sort of confirmed. Okay, so we're gonna try to bottom here. So then what I would do, and I talk about this all the time, is you just draw up from that impulse and you get this zone on here, this RLZ, and look at that sweet spot. Of course, always seems to be the sweet spot. So once you get that confirmation, and I used to do this, I used to buy breakouts all the time. And I'd be like, okay, we got the breakout, go. And then I would have my setup, sounds like a bit like what yours was, like such that, I'm like, okay, I'm going to risk back to this breakout. Maybe I'm going to risk a little below. But I find it's uncanny how many times after this breakout, you draw it up and it will pull back and fill beautifully right in this reload zone. Which might have bailed you out and it's exactly for that reason, because sometimes, the way I used to do it, the breakout trades, whatever, but the problem with this is often you miss, you can just miss, you just don't get filled.
Right.
But it allows you to take some size. And it's just funny because I thought as you described it, I was like, oh shit, it was that dip into that RLZ that really, drew up a lot of stops. And then of course the buy volume pours in right after.
Right. And that's actually, whether it was on this one or other coins, I missed basically that whole retest because I got out when it was weaker. Usually this stuff assigns when are you going to bed? You're on a 1 hour chart here. Yeah. So I saw the weakness and I got out before it impulsed down. I don't even think it was
like
this
right up here. You just got the bug out.
Yeah. And then I had to get back in like halfway through that big green candle, or if I was trying to get back in on some of these, I can't really remember. But that's what makes it tough is these, you've got these situations where they're overnight. I think it was Curve where I did that. He just switched to me temporarily. Like I think I got out at like 49 cents, something like that. And it's like, and then I missed the fun part, and I found some other stuff that I was able to trade, but it's tricky. So you either have to position size to be able to take the hit, or you need to, be willing not to be in the trade. But after you spend time trying to time, when is that capitulation going to happen? When is it going to find the bottom, and then hop in there? It's a tough battle. You're not going to get them all.
No, it's a grind, and that always going back to risk management. If you just set yourself up to be able to take a few hits, then you can have a few shots at finding that level. I mean, as you can see here, if I tried to trade my sweet spot, I wouldn't have got filled. It was a 618. But this is how I look for these bottoms. Now, I haven't been trading too aggressively again because I only just flipped sort of back to like, I should be looking for longs on Friday. It's been a long weekend here in Canada, so I haven't been on the charts too much. But it's these kinds of, you get this double bottom come in, and we're seeing it in a lot of alts right now. And then it's, patience, wait for that test. One coin that I'm doing this on, we talked a little bit about before the show, is AVAX. DOT and AVAX are two I want to position on. Go figure. I'm not getting any of those drawdowns right now, but I'm watching this one
that's like no dips allowed type of price action right there.
Yeah, this one, and it's probably a 382. Actually, I think it front ran. I was looking at it earlier, so that's also really bullish. Yeah, so a nice little front run here. We remember what we saw earlier. What happened to VET after that, where you don't even get that sort of gentleman's retest where it would let us get in on the 382 pump chase, which I could draw up this way. So I'd rather, this is actually just going to confirm now on the 12 hour. So I'm waiting for this to come in. I'm sure it will, it looks like. So that's like 6 hours away. And then I just got to get aggressive. I got to start buying the dip, and that's going to be probably the next 382. So something like this. And then I'm just going to have to grab that. And that's the idea of this pump chaser zone. It's kind of an oxymoron because you shouldn't chase pumps. But my point was like, hey, if you're going to do it right. Don't buy new highs arbitrarily, but every time there is a new high, you can draw this up and just chase from here, because it's uncanny like how many times these things just get a tap and go. And then you can even run stops below the 0.5 if you want to get cheeky and manage risk. So
that's one of the things that can be nice too, is this is a new coin. So there's probably some fundamental drivers that they've got behind it. And then you've got this opportunity for price exploration. That's the type that if I was going to have significant exposures right now, like I'd be looking for something like that. I'd also be looking to trade it on a centralized exchange where I can manage stops and stuff. And I think that makes it's tough on Uniswap right now. Like I'm not as active. Like I'm much pickier about what I want to be in on the Uniswap stuff right now, because I might need to sell quickly and get out of there. And that's all going to depend on the liquidity and the trade tools that you have available to you, and what all you can put together to help you out. So for me, I'm just trying to be picky, trying to play coins where I feel like they've got a good chance at kind of whether it's a bullish retest or just they're back in their kind of demand zone and responding off of that to seek some upside. But I'm not trying to get too greedy. I'm not looking for like 100% or 200% multiples and things like that. Because I think, Bitcoin's probably going to be in control here, depending on what happens. Like if it gets that breakout, then it's going to hurt some of these relative pairs. So you may float relative to the dollar, but I want to maintain my Bitcoin exposure there. It's part of why I decided to have that margin long that I mentioned, is because by being margin long Bitcoin, if I'm now in some altcoin, say it's the same amount, my margin position is the same amount of dollars as the coins that I have exposed to altcoins, I'm essentially hedging the fact that I might lose relative to Bitcoin in those alts by being margin long on Bitcoin. So I'm still getting the gains from Bitcoin.
Well, that's an interesting strategy. Yeah. So you can trade and sit in some alts maybe more aggressively when you see dominance trending up, but you just have to be in a long that kind of offsets that risk. Yeah.
And if you get lucky, it goes together. But you don't.
That's the dream. Yeah, that's the dream. And actually, I do see a potential for that. I think I was actually just looking at it today. So we've got the dominance chart here, which you just kind of alluded to is worth bringing up, because we were at this sort of rangy, choppy window here, and I actually flipped this to risk off about mid-September. It officially kind of confirmed bullish market structure, which to me is like time to sit in Bitcoin or Tether. Like it's not time to be sitting in a whole bunch of altcoins, because Bitcoin just looks like ready to rip face.
And when Bitcoin rips whichever direction, then that's not going to help your alts.
It's risk off. Yeah. Like alts are just going to bleed out. And that's, I think still arguably so early in their cycle that in their lifespan that they are really just a vehicle for acquiring more Bitcoin for the most part. There's no real demand for any one coin beyond maybe Ethereum, I think BNB, Tether.
If you get lucky enough for like a BNB or a Link or something, when they're really having a fundamental driver, then sure. But your average altcoin, no.
For the most part, yeah, it's just clockwork, right? It's all basically algos. They're just going to dump on command. So, I could see a scenario where Bitcoin dominance, we rip through Q4 and Bitcoin hits some of those newer highs like we talked about, getting up into the 12, into the 14K range. And that would, I would think, certainly give us a shot at pushing dominance up to 65, which would make a lot of sense on this and would actually set up such a sweet window as far as like getting into some altcoins. If that happens. So maybe I'm wishful thinking. I'm like, man, it'd be so nice to buy those dips. But that would also be pretty scary for a lot of altcoins. That would mean new lows versus Bitcoin, which is like, let's build a whole new base. So I've just got these two squigglies here to say, like, look, we could just stay flat here for a bit. I'm actually pretty impressed with Ethereum, which is now outperforming Bitcoin the last couple of days. Okay. Yeah. So it's actually, it's outperforming, Bitcoin here through this push, which is pretty interesting. And I think we should wrap with a quick chat on Ethereum. Iman wants to know, and he's wondering about Ethereum. And I think it's a relevant point. We got ETH 2.0. Rehearsal went really well this morning. There was a lot more participation on the network. They're still talking about a 2020 release date for staking and all that. And as you can see here, Ethereum on the 4-hour pushing up today with a nice push on volume this morning, probably on the news of that rehearsal going well and kind of confirmation of a 2020.
Yeah, that's funny. I didn't even realize that was a thing right now. I really like
to, right? So it's a pretty sweet catalyst if there ever was one.
I really like to look at the open interest in options and futures and stuff. But Ethereum options have been fascinating because there's just been this target on the 400 strike. Like it's just such a round number for people to be interested in. And also I showed you the implied volatility versus realized volatility before. And the realized, this is actually the flip of Bitcoin. The implied volatility is still way down, which basically means the options are cheap. So someone that was long calls as Ethereum started to recover would have been doing pretty well here. And with that $400 interest point, it just feels like it wants to tag 400 at least. So maybe it'll pause out by the time it gets there. But I found that fascinating, and I still. What you mentioned, Ethereum just still looks strong. Like it should not benefit so much as Bitcoin goes up. But you talked about Ichimoku at the beginning. It's in this big fat cloud, which usually these coins, when they go in these big clouds, they like to go from one side to the other. It's called an edge to edge trade.
Okay.
So whether it takes its time and it, hits maybe like 450, 470, or if it goes really fast, kind of these ledges tend to be targets on recoveries, like especially if you go back to some of the old altcoin charts and stuff. That's one of the things I like to look out for. So, I mean, Ethereum could have a heck of a move. And if it goes back in, our 14 to 16K zone on Bitcoin is the same thing as $800 on Ethereum, which is that's a 2x for Ethereum, which would be a faster move than Bitcoin. So weirdly enough, Ethereum may outperform Bitcoin even during a bullish impulse like that.
Which is
but that may not translate down to like all the other alts, like the Unis and the Wi-Fi's and all those.
Well, that's the $1 million question, right? Because that's probably where your leveraged exposure comes in. If that's going to happen, then some shit coins are probably going to outperform. But again, I think with ETH 2.0 coming out, that's the catalyst you need for such a scenario. And
yeah, you taught me something there, because I didn't realize that ETH 2.0 was that progressed in its testing.
I didn't either, to be honest. Over the last few weeks, I've been kept hearing about November. I was like, really, November? Like we should be seeing a bigger rally. Like I think it's going to be delayed or something. And insiders, whatever. Maybe we'll just end with our Chad whale chart, because we've got a long open interest that Nick and I have been tracking for months, and it just keeps pushing to new highs. And the reason I say Chad whale,
the Bitfinex longer.
Yeah, I know you've been watching this too, I guess, but every major dip, there's just been a huge surge of long open interest. And whoever it is probably sitting there thinking, ETH 2.0 is coming and it is going to be bullish. It's a known catalyst. They're building this like generational long position. It's like such a sick trade. I wish I could like just, pick their brain, get the money, or be like, what's your P&L right now? What's your freaking cost basis? Like this.
I'll tell you what. When that USD or ETH USD longs, when that trend starts to flip, you get out of there. You get
and that's what we were watching right here, right? Because it was actually coming up. It was bearish divergence. It was looking toppy, and I put out a tweet to that effect of like the sweaty like Key and Peele guy like sitting right here just staring at it like no, but it held and it's just pushing to new highs right now. So I think ETH 2.0 is going to happen. It's going to be very bullish. It's not even a question of when or maybe. So, well, when is of course the question, but I think, now we're hearing about 2020. So going back to your cloud, I mean, it doesn't seem that crazy to hit, from that lens to hit 800 from end of year. If they announce that that's definitely happening and there's a hard date set, forget about it. That thing's going to fucking rally like crazy. So,
yeah, I think we'll top at the end of the year. Personally, like I think the tax implications are very real for people that they owe based on year to date. So people are going to have to put money aside as the year ends, and
tax selling season is a joke. It's real.
Yeah, and Q4 is historically very bullish for Bitcoin. Josh mentioned in that last podcast that it hasn't been for Ethereum, which is strange. So Ethereum
bottoms in January historically, almost to a T. And we've been watching it over on TRI channel. Like everyone talks about it. They're like, oh yeah, like buy Ethereum in January. You'll always have a good year. So it's going to be interesting if we end up. It would make sense though. ETH 2.0 is going to change that trend a bit, I would think, and we'll see. A rally into end of year, just like 2017, would be pretty sick. We get some tax selling and going on like that.
That's kind of my summary. Is like I was pretty hesitant, thinking like we may have some volatility going into this U.S. election and all the drama around that. I feel like one, we're getting more certainty in that, and number two is I don't think it matters as much who wins, considering the amount of that institutional money that we talked about being on the sidelines. That's just going to seek somewhere to put money as things become more real. And then the time to decide, hey, the real economy is lagging, that could easily be like midway through next year. Those things can take a long time. Like topping is a process. So there's plenty of time for Bitcoin and whatever else to move up and have some serious markup, even if we're going into a deeper economic recession or something like that and get that contraction like you talked about. But I lean towards we're just going to inflate the crap out of this thing. We're just going to print money and try to make the problem go away.
Yeah, they're into that spiral that Andreas Antonopoulos always talks about as being the inevitable outcome for all fiat currency.
And I never would have guessed. Like it's such a hard thing to predict. Like to say, like, we're going to have hyperinflation or something. We have no proof of hyperinflation, but even the little bittiest amount of real inflation is extraordinarily bullish for Bitcoin.
Yeah. Yeah. And I think that's a really great place for us to wrap today on that point, because it's such a nice summative point you made. I know you got to run. I got a call as well. Ledger, it's been an absolute pleasure to have you on here, dude. I've just like this flowed so nicely, and I love the way you look at charts. And so, I mean, you are more than welcome to join us anytime you want to jump on here. And
thanks for having me. I really appreciate it. And, you know, I've been following the stuff that Hxro's been building for years now. Y'all doing a great job, and I appreciate you having me and letting me hop on and talk charts with you. It's been fun.
Yeah, appreciate it, and look forward to the next one. Now, I'm going to just wrap with a quick plug on our channel. If you guys really like what we're doing here today, hit us with a like and a sub. Feel free to comment below and let us know what your favorite part was, or something you want to see more of, and we can fire that up for you. Nick will be on. Actually, Nick and I will be on Wednesday as a dual stream, so you can look forward to that. And until next time, make sure you always play from a position of strength. Take care, everybody.